Hello everyone, and welcome back to the channel. Today we're going to take a deep dive into Tilray brands, ticker Tlry. Whether you're a current shareholder, considering investing in cannabis stocks, or just interested in market trends, this video will give you a thorough update on everything you need to know about Tlry. Over the next 18 minutes, we'll cover Tilray's business, recent stock performance, key news, financial health, insider and institutional activity, analyst opinions, and what the future might hold for this leading cannabis company. Let's start with an overview of Tilray brands. Tilray is a global leader in the cannabis, beverage and wellness industries, with headquarters in both New York and Leamington, Ontario. The company has made a name for itself as a major player in the cannabis sector, expanding its operations through strategic acquisitions and partnerships. Tilray's product portfolio includes medical and recreational cannabis, hemp-based foods, and wellness products, making it one of the most diversified companies in the industry. Now, let's talk about recent stock performance. Tilray has experienced significant volatility this year, reflecting broader trends in the cannabis sector and macroeconomic factors. As of mid-June, Tlry was trading around 36 cents to 42 cents per share, depending on the day. That's a far cry from its IPO price back in 2018, but it's important to note that the cannabis sector as a whole has faced intense pressure over the past few years. In recent weeks, the stock has shown some signs of life. For example, on June 11th, Tlry closed at 42 cents, marking a 2.37% increase from the prior trading day. Over the past week, the stock saw a nearly 5% price increase, coinciding with the company's approval of a reverse stock split. This move is designed to give the company greater flexibility in its stock structure and could help attract institutional investors by boosting the share price. Despite these positive moves, the overall trend for Tlry remains bearish. The stock is trading well below its 50-day and 200-day moving averages, and market sentiment is largely fearful. The Fear and Greed Index for Tlry currently stands at 39, indicating fear among investors. Only about 43% of the last 30 trading days have been positive, highlighting the ongoing volatility and uncertainty in the sector. Let's take a look at the financial health of Tilray. The company has faced a challenging environment, with declining revenues and ongoing losses. However, Tilray has managed to maintain a relatively strong balance sheet, with significant cash reserves and manageable debt levels. This financial flexibility allows the company to continue investing in growth opportunities despite the tough market conditions. Tilray's management has been proactive in addressing these challenges. In addition to the reverse stock split, the company has focused on cost-cutting measures, streamlining operations, and expanding its product offerings. These efforts are aimed at positioning Tilray for long-term success, even as the cannabis industry remains under pressure from regulatory uncertainty and market saturation. Now, let's talk about insider and institutional activity. Over the past year, insider activity has been relatively quiet, with no major buying or selling reported. This could indicate that insiders are waiting for clearer signs of a turnaround before making significant moves. On the institutional side, there has been some rotation, with some funds reducing their positions and others increasing their exposure. This mixed activity reflects the uncertainty and volatility in the sector, but it also shows that some institutional investors still see potential in Tilray. What are analysts saying about Tlry? The consensus rating among analysts is generally a hold, with most recommending caution given the current market environment. Price targets are all over the map, some as low as a few cents, others as high as $12.31 per share. The wide range reflects the uncertainty and volatility in the cannabis sector, as well as differing opinions on Tilray's long-term prospects. Some analysts remain optimistic about Tilray's diversified business model and its ability to capitalize on future growth opportunities, especially if cannabis legalization accelerates in key markets. Others are more cautious, citing ongoing regulatory challenges, market saturation, and the risk of further downside if the sector continues to struggle. Let's talk about technical analysis and market sentiment. Technical indicators currently show a bearish trend for Tlry, with the stock trading below its key moving averages. The 14-day Relative Strength Index, RSI, is around 37, which is not yet in oversold territory but does indicate weakness. Volatility remains high, with the stock experiencing frequent price swings in both directions. Market sentiment is largely negative, with the Fear and Greed Index showing fear and only a minority of trading days being positive over the past month. This suggests that investors are cautious and that the stock could remain under pressure until there are clear signs of a turnaround in the sector. Let's look at some of the risks and opportunities for Tlry. Risks. Regulatory uncertainty. The cannabis industry remains highly regulated, and changes in laws or enforcement could have a major impact on Tilray's business. Market saturation. The sector is becoming increasingly crowded, with many companies competing for market share. Financial challenges. Tilray, like many of its peers, is not yet profitable and faces ongoing financial pressures. Volatility. The stock is highly volatile, which can be risky for short-term traders. Opportunities. Diversified business model. Tilray's expansion into beverages and wellness products gives it multiple revenue streams beyond just cannabis. Strategic acquisitions. The company has a history of making smart acquisitions to expand its market presence. Potential legalization. If cannabis legalization accelerates in key markets, Tilray could be a major beneficiary. Strong balance sheet. Tilray has significant cash reserves and manageable debt, giving it flexibility to weather market downturns. Let's zoom out and look at the bigger picture. The global cannabis market is expected to continue growing over the long term, driven by increasing legalization and changing consumer attitudes. Tilray is well-positioned to capitalize on this trend, thanks to its diversified business model and strong international presence. However, the near-term outlook remains uncertain, and investors should be prepared for continued volatility. To wrap up, Tilray Brands is a company with a lot of potential, but it's also facing significant challenges. The stock is highly volatile, and the sector as a whole is under pressure from regulatory uncertainty and market saturation. However, Tilray's diversified business model, strong balance sheet, and strategic focus on growth give it a solid foundation for the future. As always, it's important to do your own research and consider your risk tolerance before making any investment decisions. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our next update. Thanks for watching, and see you next time.